There's no denying that the reverse Kramer is one of the most powerful force in financial markets, but not more powerful than the most important banker in the world, Jamie Dimon, who is capitulating to Bitcoin and saying, "We will defend your right to Bitcoin." But the most powerful boss of them all, Jerome Powell, might need to bow the knee to Bitcoin as well and pump Bitcoin's bags. A federal appeals court just said that President Trump is likely to be able to fire Jerome Powell. Regardless of what happens in the short term, the long-term structural wins are in the favor of Bitcoin. Congress is preparing for a new digital asset future with new regulation. Bitcoin bulls are aping long, like they know something's about to go down. Scott Bessent acknowledges our debt problem out loud and says the only solution is growth, which is why Mexican billionaires like Ricardo Salinas say that Bitcoin is going to 10 million from here. It's all green lights for Bitcoin, and we've got a bullish episode for you today. This is Dante Cook of Bitcoin Simply. Let's go. Over time, everyone changes their tune to Bitcoin. Like random guys on Twitter, like the finance guy, who said that Bitcoin is the biggest Ponzi scheme out there a year ago. And today, he's saying it's one of the only places that he would park his money. But this isn't just true for random guys on Twitter. This is true for investors globally. 30-year treasuries are ripping globally. The Japanese 30-year just hit its highest mark in 25 years. The United States 30-year hit above 5%. Germany, 3%. In the UK, 5.5%. And this just means that people don't want to hold government debt long term. They don't trust it. They need a higher return. And this is why analysts like Ledn believe that Bitcoin is going to hit escape velocity and have a lot of room to run.
Bitcoin I view as hitting escape velocity, which is that it's the dominant, by far, monetary protocol around in terms of security, liquidity, and pretty much any other metric you'd look at. And it's still, I generally look at it as what is its total addressable market? A pretty meaningful percent of liquid fungible assets is its total addressable market, which is when you have this really high long-term price forecast of 20 years in the future, it's because someone's saying, okay, if we look at global assets, it's a quadrillion in assets roughly. Gold is 2% of that. Bitcoin's 0.2% of that. And it's like, well, what if Bitcoin goes to 2% like gold? What if, because of its superior qualities, what if it goes to 5%? What if it goes to 10%? And I don't really try to predict what percentage it can get to, but I think that 0.2% is still low. And so I think that this monetary protocol, the network effect signs compared to any other competitor are basically 10x compared to the next, that's where the saying there's no second best comes from, is that there's no Pepsi and Coke here. It's like Coke and then store brand that you didn't hear of. And so it's not even close. And so the combination of one, dominant protocol, and two, very little adoption when you look at the grand scheme of asset sizes out there, which means ideally a lot of room to run.
And this is why billionaires like Tim Draper, whose firm bought 30,000 Bitcoin in 2014, are not resting on their laurels. They understand that there is a short window of time to accumulate as much Bitcoin as possible. They're continuing to stack.
You've predicted that Bitcoin will be worth $250,000 by the end of 2025. It got me thinking, how much Bitcoin do you now own? Because we know that you bought 30,000 Bitcoin seized from the Silk Road in 2014. Forbes says your net worth is 2.9 billion. I don't know. I'm sure you've spent some of that Bitcoin on investments, but 30,000 Bitcoin is worth about 3 billion today. Are you okay with clarifying or disclosing how much Bitcoin you own? And is Forbes right about your net worth?
I just keep buying more.
Tim Draper goes on to say that he thinks Bitcoin will be the biggest asset in the world 10 years from now. And that same messaging is happening all across the world, even at crypto conferences like Token 2049. The only thing people are talking about is Bitcoin, like executives from BlackRock, who say that Bitcoin is a scarce, decentralized asset detached from economic, political, and monetary risk globally.
As a scarce, global, decentralized asset that's detached from economic, political, monetary risks of any particular country, it behaving like that was an incredible switch that caused a lot of the capital that had been sitting on the sidelines trying to figure out, well, fundamentally, this feels like it should be a diversifier and a hedge, but sometimes it trades like it's levered beta to NASDAQ, and if it's that, I don't need it in my portfolio, but if it's this, if it actually is a diversifier and a safe haven, then I absolutely need it in my portfolio. What surprised me was that just one day, Eric, of that, and all of a sudden the flow machine came back on in a massive way like we've barely seen since these ETFs launched.
VanEck's CEO says that we're just getting started, and the conversation happening in the back rooms are just now flipping to Bitcoin.
Bitcoin is so far away from penetrating those dark rooms where the big money lies. Now, sorry, long answer to your question about the wealth channel. I think we're seeing the beginning of adoption, but even for individual investors, some of the biggest retail brokerage firms wouldn't allow the sale of Bitcoin ETFs, Vanguard, for example, right? I mean, that's a big exception. That's for the first wave, right? Now, if we're looking at financial advisors, long ways to go before most allocators include Bitcoin, and we can talk about why, into their portfolios. A long ways to go, and kudos to BlackRock for doing some of that.
But the biggest factor behind growth in a macro sense isn't financial advisors advising on Bitcoin. It's the United States government. Scott Bessent has been acknowledging multiple things. He acknowledges that we are running an extremely large deficit, 6.7% to GDP to be exact. And he says that the only solution out of this isn't to decrease our spending. It's to outpace our rate of growth. The money printers are about to turn on.
There are several components there. So if we unpack it, there is the growth, the potential growth of the debt. But what's more important is that we grow the economy faster. So what we've seen under the past 4 years, and what we inherited, I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP, which even Secretary Yellen and I agree is the most important number.
And although I don't agree with Arthur Hayes on everything, you have to admit he's one of the best traders in the world, and he's sniffing this out, saying that the United States government has only one option, and that's to print money, which he believes will drive the price of Bitcoin to $1 million by 2028.
Don't worry, we're going to $1 million by 2028 because we're going to print more money in Trump's 2.0 than Biden did in his term. Why? For all the reasons that I just mentioned, we're already tracking at 22% higher. What happens if this China-US sort of divorce goes badly and both sides stick to their own guns and don't want to compromise? Well, is Trump and the Republicans going to not try to win a 2026 midterm election? Of course not. They're going to do what they need to do to stimulate the economy, to create the impression of growth and strength so that they get reelected just like any other politician. And so because of this secular change in the relationship between the two largest economic and military powers is going to be funded with printed money, Bitcoin is going to go much higher than it did from 2022 to 2025. And that, ladies and gentlemen, is a road to $1 million Bitcoin. Thank you.
And here's the thing. If the United States government prints all of that money, Jerome Powell aligns with Donald Trump, well, your Bitcoin's going to be worth a lot more. And you're not going to want to sell your Bitcoin for worthless fiat. One of the ways that you can unlock liquidity in your Bitcoin without selling your Bitcoin is by working with Ledn, the leader in Bitcoin-backed loans since 2018. They've issued over $9 billion worth of loans to tens of thousands of customers, and the average time to liquidity in your account is 18 hours. Applications can be done in just 2 minutes, and the process is simple, transparent, and fast, which is why they have over 1,000 five-star customer reviews. I'm a customer of Ledn. Bitcoin-backed loans start at 12.4%. But for people that watch this show and go to learn.ledn.io/simply, well, you get 0.25% off of your first loan. Don't sell your Bitcoin. Unlock liquidity in your Bitcoin by working with Ledn. Another thing about Bitcoin going to $1 million by 2028, it's sort of like an umbrella. It's better to need it and not have it than have it and not need it. And one of those things in Bitcoin land is security. And that's maintaining your own keys off of third-party exchanges like Coinbase. You better believe that when Bitcoin is worth $1 million a coin, well, there's going to be a lot of things that are going to keep you from being able to just pull your Bitcoin freely off of exchanges. So do it now, but do it safely, privately, confidently, and securely with help from a Bitcoin advisor at thebitcoinway.com. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin to learn how to protect your generational wealth the right way. Scott Galloway is one of the most controversial figures in media. He says some stuff that's off the wall, but a lot of times on economics and making money, he's pretty spot on. His analysis on the problems in this country are spot on. Our system is designed to rob the poor and middle class and pad the pockets of the rich. This is probably the largest structural tailwind behind Bitcoin.
The average 70-year-old is 72% wealthier than they were 40 years ago. The average person under the age of 40 is 24% less wealthy. And if you think, I believe that almost every major economic policy in the US is nothing but a thinly veiled transfer of wealth from young to old, from the entrants to the incumbents. Two biggest tax deductions, capital gains and mortgage interest. Who owns stocks and homes? People my age. Who makes their money from current income and rents? Young people. Social Security, which you're not supposed to talk about as this third rail, I see it as just a $1.4 trillion transfer of wealth from young people to the wealthiest generation in the history of the planet. I'm not suggesting Social Security is a bad idea, but let's call it senior security, because I think that type of transfer of wealth should be based on need, not on whether or not you have a catheter. So I think it's outrageous what is going on. And what do you know? We have, and then the ultimate intergenerational wealth transfer in the history of the planet was, I have an idea, under the auspices of a virus, a million people would be bad, dying would be bad, but what would be tragic is if boomers got less wealthy. So let's come in and flood the market with $5 to $7 trillion in stimulus. 60 to 80% of it, depending on which survey you look at, was not spent. It was saved. It wasn't spent on food or medication. It was saved. People didn't need it. So what happened to that money? It went into the market. And you saw real estate prices go from an average of $290,000 to $410 in the US. And then when you couple that with interest rates, the average mortgage has gone from $1,100 to $2,200, meaning that whereas 2/3 of Americans could afford a home, now it's 1/3. So if you owned a home, champagne and cocaine. Look at what's happened to the stock market. Look what's happened to the stock market. It's screamed, right? So it's great if you own stocks. So the entrants have essentially been screwed to keep the incumbents rich. And who's going to have to pay for this stimulus that benefits me? The entrants. It's debt. It's all been debt-fueled.
Every major policy in this country is a thinly veiled wealth transfer from the young to the old. The monopoly on money printing from central banks has created the greatest lie ever told: inflation theft. I love this clip from a conversation between Robert Breedlove and Jeff Booth.
And the central banking paradigm as a legal monopoly is used as institutionalized system of theft, right? So we violently and deceptively preserve I'm speaking from the perspective of central bank shareholders, their right to print money, and they suppress all competition, right? No one else is allowed to get into the currency counterfeiting game. Only the central bank is. That effectively allows it to generate perpetual profits, right? It's literally in the money printing business, right? There's that great clip of I think it's a New Zealand central banker. He says, central banking is a great business. We print money and people believe it. That's it in a nutshell. So you have this profit center that can generate profits ad infinitum, basically, as long as the currency doesn't hyperinflate, right? The purchasing power stolen through inflation, through currency counterfeiting, is then used, we already know, to wage endless wars, right?
To educate a whole bunch of economists.
That's where I'm going next. Yeah. The spinning of false narratives, not only fake news, not only propaganda, but an entire pseudoscientific paradigm called Keynesian economics.
Complete pseudoscience.
So the question I want to get at is, you're saying, and I hear you, we believe or bought into this system, but it wasn't just a harmless choice. We're like, do we want sound money or do we want this? We had this other system actively cultivating, educating, manipulating, deceiving, I don't know what term you want to use here, encouraging people to believe that you needed inflation and you needed money printing, you needed all these things. So the system that's used to steal from people then uses the stolen proceeds to fund the psychological manipulation of those victims to get them to buy into their victimization as if it were good for them.
Yeah.
It's a very pernicious problem.
Yeah. They can't, and that's why you heard me say over and over, a system problem can't be resolved from the system creating the problem. Mm-hmm. And so it has to be resolved from something else. Yeah. And so that system problem, which we are all a part of, and if you're spending more of your time in it, you're blaming other people, and you're a part of that system that's reinforcing and stealing more of your energy, and has to steal more and more and more of your energy in that control system.
Bitcoin enables us to remove our energy and our money from this system of control. And it's not just exclusive to people who have a financial advisor or money or are closest to the money printer with the Cantillon effect. We all get to participate. Not only can you benefit from the policy coming from the system, you have an opportunity to exit the system with Bitcoin. Don't overcomplicate the trade. And don't overcomplicate getting your tickets to Las Vegas from May 27th through May 29th to the Bitcoin conference, the largest Bitcoin conference in the world. 20 to 30,000 Bitcoiners are going to be coming from all across the globe, including your friends at Simply. Go to b.tc/conference/2025 and use the promo code SIMPLY to get 10% off your tickets. If you get value from this content, please do like and share these videos. And if you haven't already done so, smash that subscribe button. This is Dante Cook with Bitcoin Simply. Happy stacking.